Today I want to go over something very important. This is actually so important that if you don't understand this, you'll probably never make money with Propfirms. I'm here to break your limiting belief, or at least help you think in the right way. This video could be a turning point in your trading career, in your Propfirm trading career. So please, before we get into it, make sure you take notes, close all other tabs, put your phone on silent, and make sure you give this one your full attention. If you've done all that, we can go into the video. Okay, so this right here is the question of the hour. Can you actually make money with Propfirms? And if the answer for you is no, or if you're still doubting the answer on this question, then it will be very difficult for you to actually extract money from the markets. So in this video, I'm not only going to show you how to make money with Propfirms, prove you that it is actually doable, but I'm also going to give you some tips on how you can make this journey a lot easier for you. Now, I've been a trading coach for the last 3 years. I've been a trader for the last 8. I've extracted multiple payouts from Propfirms. My students extracted multiple payouts from Propfirms. So there's already some proof, but everyone throws these certificates around on the internet and you still don't know if it is actually true or actually doing something, or was it just luck, or is it just all one big scam? I want to go over some things in this video where I will try to change your limiting beliefs and I will try to change the way you think about this so that you can go ahead and actually focus on making profits. So this video is for you if you doubt yourself and if you doubt that this is even possible. And I'm here to change your limiting belief. That's going to be my #1 goal today. And of course, give you some handy tips and tricks on how to pass these Propfirms a lot quicker, but also a lot better. I want to give you a quick reality check first. We have 2 groups of people, right? The 99% and the 1%. Now, the reality is that only 1% of you watching this video is actually going to succeed trading Propfirms. And you might be a bit egotistical thinking about yourself that you are going to be that 1%. The harsh truth is that if you don't do the things that I'm talking about in this video, you will remain in the 99%. And basically my goal is not only with this video, but also something that I was thinking about lately is that I want to create as much as possible funded traders so that we can change the odds at least a little bit. And what I actually then want to do is create a firm together where you can all trade live capital and we're basically both winning in the end. So that's my main goal, and that's why I created School of Funding as well. It is my one-on-one program. But this is not a plug for this. I just want to say that if you're not going to be doing these things that I'm talking about in this video, there's a big chance that you will stay in the 99%. So make sure you're making this transition already in your head that you want to be this one guy right here, the 1%. Because if we look at Propfirm stats, only 1% of traders actually gets a payout. And I think if you do the math super correctly, it is even less than that. So this 1% is not because Propfirms are scams, definitely not. But because traders are not really doing the math. And today I'll show you exactly what it takes to actually get paid and how I approach it. Because there is a system to this. There is a system on how to pass Propfirms. And if you do the math correctly and you follow your system, it actually becomes very, very easy. So this group of 99% of traders, they never get a payout. They blow it before the second payout, or most of the time they get false hope from online trading gurus. And sometimes people categorize me underneath this one as well, the online trading guru. I do my best to stand out from that group as I don't want to be associated with the Miami traders. But I get it, the flashy lifestyle is cool, it's nice, it's attracting to see, so to say, especially for the younger generation. And it is also what got me into trading, let's be honest here. So they're definitely doing a good job getting a lot more people into the field, into trading, but they're also ruining a lot of people's life as they're giving false hope that it is super easy, which is not. It's not an easy field to play, and you need to know exactly what to do and also how to improve if you're stuck at a certain level. So you're stuck at a certain level because of the false hope, you blow it before the second payout, or you never get a payout in the first place. To be honest with you, probably 99% don't even get to the funded stage. So you start to ask yourself, is this even possible? And the simple answer is yes, it is possible, but only if you're doing the right things for a long enough time for it to work. And that's just the simple, honest truth. You have to do, and read this one again. If you're doing the right things for a long enough time for it to work. So what can we see? We can see discipline in this one, and we can see consistency in this one. All right. Now, you want to pick the right Propfirm. That's where it all starts. If you don't pick the right Propfirm, you're going to get scammed right away, even if you do everything right from the get-go. And then we come to the sponsor of this channel, but to be honest with you, I think it is definitely a firm that is very respectable holding their spot in the top 3. It is Funded Next. And Funded Next at the moment even is doing an 8 offer where you get a 12% discount, a 500% passing reward, or an 8% discount and a 300% passing reward on the bigger challenges. You just need to do code 812 or code 88 and you can take advantage of this. Let's say this offer is already gone, you can do JORFX5 and you still get a 5% off there. Now, why do I say Funded Next is very respectable? It's a top 3 firm. There are 38k people that have been paid out, 134 million in payouts that have been paid out. And the nicest thing about Funded Next is that you get a 15% profit margin in your challenge phase. So if you pass the challenge phase, you get a 15% of that already on top of your first payout. And now it's even up to 500 and 300% with the 8 offer. So that's literally amazing, right? That's literally amazing. You have CFDs and you have futures. So if you're trading futures, this is also possible. So yeah, if you want to start with Propfirms, but you don't know a good one, I would say take advantage of this discount code and go check it out for yourself. So now that you have the right Propfirm, you only need to do 3 things really. And these 3 things, they will create the pillars of profitability. So the first pillar is know your profitable strategy and stick to it. And when I mean know your profitable strategy and stick to it, is create a strategy. And you can look up on YouTube, you can learn from other places on the internet, but learn a strategy and make sure that you write it down completely so that you can also look at it every single day. Now, once you're doing that, make sure that you're sticking to it and make sure that you're journaling it. So sticking to it will be the hardest part for beginners, right? Because as soon as they see a losing streak of 3 to 4 trades, they will probably switch. Make sure this is not you. It's a very easy one to avoid. Now, if you're doing that, make sure you're also journaling so that you can see, okay, am I actually executing the strategy right? Every single day over and over again. Also, you can start to collect data so that you actually see how good is your strategy. And before you start implementing this into the live market, you should implement this first into the backtesting market. So you open up FX Replay or whatever backtesting software that you use and just go back a few years and start trading your strategy, start collecting data on it so that you know, okay, this one is profitable and I have something to stick to right now. Now, the middle pillar is a have a low trading frequency. And a lot of people have commented me on this, or not a lot, some. And they say, okay, what about the law of high volume or the law of high numbers, whatever it is? It's basically that if you have an edge or if you want to see an edge play out, you have to put in a lot of numbers, put in a lot of trades so that it plays out or more, or it plays out in the first place. And I don't agree with this because the more you execute your trades or the more trades you execute, better said, the more exposure you have to the markets. And the more exposure you have to the markets, the more your mental game is at risk of making mistakes. So you want to have this as low as possible. And I'm not saying only take 1 trade a month. I am saying keep it to probably 3 to 4 to 5 a week. So that comes back to that 1 trade a day kind of rule. And it's purely to protect yourself, especially in the beginning. Now, let's say you have played this out and you are very good with your psychology and you are capable of taking multiple positions a day without having emotion involved. By any means, go ahead and up this frequency. But it is very difficult to juggle between this, having a high frequency and a good win rate. Go more for the sniper approach instead of the shotgun or the machine gun approach, where you're taking multiple trades and the sniper is more directed on the target. You have a lot more time to analyze, you have a lot more time to journal, because let's say you're taking 20 trades in a day. How are you going to journal all of those 20 trades? It's going to be another full-time job on itself. So with 1 trade a day, it's very easy to do that. And I'm sure of it that you make a lot more progress in a lot shorter time, even with taking a lot less trades. Then the third one is stick to your risk management rules. And the risk management rules is a very, very important third pillar. Because if you don't have your risk management rules, you don't have anything. And that's what we'll come back to in a second. This is a very important pillar. Now, if you remove one of the pillars, it's going to break. Profitability roof, so to say, is going to crack in the middle. If you take out this one, it's going to break up here, okay? And if you take out this one, it's going to break down there. So you need to have all 3 pillars in place, because only like this, you will receive profitability, or at least maintain it for a long time. Now, know your profitable strategy and stick to it. You have to give it time to show results. And that's why you go over in backtesting, and this then, for example, from the Dragon's Edge. You go to backtesting so that you also see that it works, right? You give it some time, you go over it a couple of months, maybe even a couple of years if you need more conviction, and you see, okay, my win rate, for example, on this one is around 50%, the risk reward is around 3, so I'm definitely making money with this one. Now you can bring this to the live markets and do the exact same thing that you were doing here. Because what I see is that a lot of traders, when they, for example, backtest a strategy where they only take 1 trade or 3 trades a week, in the live market, they are suddenly taking 2 trades a day. And as you see, this is a big difference, right? This is a big difference. 1 trade every 2 days or 3 days versus 2 trades a day. It's a big difference already in frequency. And as you've seen, or as you would have probably seen in your backtesting results, the setup doesn't occur that much. So make sure you're copying whatever you were doing in your backtesting also to the live markets. Now, the low trading frequency. Like I said before, the main reason that we're doing this is to keep your mental capacity high and your tiredness and burnout low. And this is something that's almost all traders oversee, is that you have to keep your tiredness and burnout low, because these two will make sure that you overtrade, go on tilt, or get scared and use no risk. So basically, these two are the starters of every problem that you have in trading and in your trading psychology. Now, these are not the only two, as you also have internal and external pressures. Now, a burnout and a tiredness, we could classify it as an internal pressure, but still, it is a pressure that you put on yourself where you're not able to perform as well. And with trading, it is all mental. Right? In theory, we don't have to be in physical shape. We don't have to be fully rested. We don't have to be preparing. We don't have to do anything like that. But if you're approaching it this way, you will never make it to the top. Now, let's say, for example, Kobe Bryant, Michael Jordan, Ronaldo, all the top highest level performance athletes, they are working on their craft literally from the morning until the evening, while the other average basketball players, for example, are going out, buying Lambos, buying Ferraris. They're watching tapes from the game. They may be free throwing at 4 a.m. in the morning. And those are definitely things that you can learn from, as that is what it takes to become an expert in your field. And it's the same with trading. You have to do so much reps to become an expert in your field. But you also need to make sure that you as a human being are making sure that your brain is working optimal, so that you can also go the extra mile and that you can also give the focus that is needed to succeed in this field. Because if you're tired, if you're burnt out, it will be very, very difficult to do this. Because then you're going to be fighting against your burnout, fighting against your tiredness, and you're almost never going to win that fight. So having a low trade frequency is just one thing that can help a little bit to avoid this. And I speak from a lot of experience in this field, and I think a low trade frequency is something that always helped me get out of being tired of trading and being in that burnout in trading. So stick to your risk management rules, and risk management rules, it's basically the only thing that we can control. It is also very important that you apply risk management to your invested money as well. With Propfirms, we're not really looking at, okay, what did I invest into the Propfirm account? We're just looking at what is the Propfirm account worth. So let's say, for example, you're trading a 100K account, right? So you're looking at risk on the 100K account, and with Propfirms, you can usually only risk 10K. So if you lose 10K, you're out. Now, it doesn't matter at all, actually, right? Because it is not your money. It doesn't matter at all. It's just simulated funds even. So it's just a game. It doesn't matter at all. What you need to think about is, how much money did I invest in order to get this? And that is usually around $500, right? This is now your risk on the line. And if you're investing this into this, just one way, and this is basically everything that you got, you're putting all of your eggs in one basket. One losing streak, one burnout or tiredness, a couple of months maybe that the market is trading against you, or whatever it is that makes you not execute your strategy right, and you lose the account. Now, if you're smart with this, you split this $500 into 5 times $100, and now you have a lot more chance. By the way, I'm sorry for this dollar sign. And now you have a lot more chance to pass your Propfirm challenge, because now you have, instead of 100K, you have 5 20Ks. All right, which means you have 5 times this 10% drawdown as well. This then leads, you can go higher in risk. This leads to passing the Propfirms a lot quicker. So I hope this is clear, because this is something that still a lot of people are not really getting, which is fine. They will get it at some point, but don't put all of your eggs in one basket, because this one doesn't matter, right? It's based on greed that you're making this decision over this one. And out of experience speaking, decisions based on greed never win, okay? So make sure you're going for this one, split your money up, and make sure that you're optimizing your chances to pass a Propfirm challenge. Okay? If you want to go for this one, make sure you have a bit more to invest. Don't spend your last $500 on this 100K account. If you have 5K, maybe, right? Maybe go for 10 100Ks or 500Ks. Now, if you're trading futures, it's a bit different, but most of the time you're doing this anyway already. Then you pay a monthly fee. It's a bit different with futures. You may pay a monthly fee and it's a lot lower as well, the expenses, but then you're doing this anyway. And then you can go for 5 times 100K. So make sure you think about this before you buy your next challenge, as we want to see you succeed inside of this field. Now, if you're able to succeed in all 3 pillars, you can go ahead and try Propfirm challenges. Not before that, okay? So if you're not having a good strategy in place that you know that you have tested, that you know is profitable and that you're confident in, don't go for it. If you have a high trading frequency for whatever reason at the moment, don't go for it. If you are not able to stick to your trading rules or to your risk management rules, don't go for it. All right? Make sure these 3 pillars are built first before you go on to the next step, that is trading Propfirm challenges. I hope you enjoyed this video. I hope you learned something from it. I hope your belief has shifted a little bit, because it is definitely possible to make money from trading. Most of the time, you're just missing one of these 3 pillars. And I'll link a document down below. It's called the Propfirm Blueprint. And you will see that the system that I just noted down right here with the 5 challenges, it is almost impossible not to pass and get a payout with it. You have like a 99 point something % win rate on that one. Win rate meaning you get a payout, which you then can use to buy new challenges, and you do the same thing all over again. I hope that is clear. I hope it makes sense. And I hope I change your limiting belief at least a little bit with this video. I want to thank you all for watching, and I will see you in the next one. Bye bye, guys.